Today I'm showing you some things that I learned in my trading journey that really were some of the worst advice I've got. Some of these are pretty simple, you might know them from the start, but some are a bit more complex and you might think it's true at the beginning. You might have to readjust some expectations on that side. So we'll dive into it. Now, the issue with these tips today is that they are advice that you can easily believe. If you keep them in your mind for a long time, you kind of you hear them from someone who is experienced in trading, you start to believe it, then it can really shift your perspective and kind of make you believe wrong things in the market long term. And then it's really hard to get rid of them once you've kind of internalized them and once you really trust them. So we'll go right into it. First things first, I've had people tell me that a good strategy should work in all market conditions. You see this all the time on YouTube where people say, oh, this strategy works well in all conditions. I've been trading this in all year round, all the time. When the market crashes, making a lot of money. When the market is uptrending, it's making a lot of money. When the market is sideways, it makes a lot of money. And that is almost nearly impossible to do. All strategies have flaws, and if you don't recognize the flaws, it means you didn't really master the strategy long enough. You didn't take time to look at the flaws and really kind of try to understand where the strategy will lose money long term. Most people are just trying to trade something. They don't want to look at the flaws. They want to try to see where it works the best. And they forget to look at the downsides of it. Like they go on a back test and they back test it, then they see how it loses money here and here, but they don't want to see that because it's kind of hard to see. As a trader, it's really your job to figure out when your strategy works best, when it doesn't work out, and to be able to find things to complement when it doesn't work out. Maybe you add a second style, a new strategy, or maybe you try to find some rules or filters you can tweak to make it better work in those times. It'll never be 100%. It's never going to work all perfectly in all market conditions, but it can be better if you tweak it and understand where it falls short. And that's really something that most traders won't take the time to do. Or they'll believe they can really make something that will work in all conditions, and until they get there, they'll start to strategy jump or change styles because they don't see it work in all conditions. Now, a few months back, I went on a trip to Europe. I traveled Europe for about 3 months. My first week I shared on YouTube. I kind of made the whole recap about my trading for the very first week, trades I took, in details, the strategy I was focusing on with the market condition at that time. If you want to see this, it's a bit old, but it's really good advice, and it's really kind of worth it to see how I traded that week. So you can check it out. It's going to be linked below. It's a free training where I really recap the whole thing about my trip in Europe, the first week I was there, and giving you some behind the scenes of how I traded it. So check it out. It's going to be linked below, the first link. We'll go through that. It's free. I thought it's a cool experience to share, cool stuff that you can learn from, and you can get it and tell me what you think in the comments. Now, here's the advice I got from many really good traders I was looking up to a few years back. And there's still people saying this today. They say screen time will make you a better trader. The more you look at the chart, the better you become at trading. And that's only true in a very small part of it, in a very small area. It's only true if you really kind of take time to look at the chart, note patterns and note things, and actually gather data on the charts. If you are just there watching price action move and you kind of see patterns form and then you see, oh, this is going to not work out, I should close my trade. Or you just try to see this and you see, oh, I should trade this because it's a good pattern. This is not the right chart time to be able to improve. This chart time will only make you second guess yourself more, see patterns that will hurt your trades, and also overtrade because you see setup that don't really fit your plan, but they're there, then you still get into it. So the key thing is chart time can be a great tool to become a better trader if you use it right. If you gather data, like you see patterns, you note them down, you see, okay, now we had this pattern on the chart, price move X number of pips following that pattern, and then you keep tracking this for multiple years of data. That can be a very good tool. It can also be a good tool if you backtest a specific edge or a specific strategy. You want to see in the market how this works out, how it's performed over time. So you go on the chart, you test it out, you see when it failed, and that will be good to understand when it failed and what happens when it fails. Then you see when it works well, then you see when it doesn't work well, and you see when you have no trades at all in the market. That can be a good sort of chart time, but just saying screen time is good for experience, it's not really how it works. In the same way that being in the cockpit of a plane doesn't make you a good pilot, it just makes you kind of good at seeing the cockpit. Trading works the same way. Like you won't be good because you are at the chart, at the screen. You are good because you see things, you do things, you practice on stuff, you gather data, and you see how trades are placed in the market. Next, we gotta talk about day trading and swing trading. I've heard this advice so many times from, especially day traders, always say this. Day traders make more money than swing traders. Common advice. You hear this all the time. They say, oh, you can make more money if you day trade than if you swing trade. And that seems true at first. Like, yeah, of course, you trade more, you place more trades, you're more active, you have more opportunities to make money. But I've seen so many day traders who get either screwed by commissions, by fees, either in pips or, of course, commission on their account. So they pay a ton of fees. They pay more taxes too at the end of the year because they have a more active style of trading compared to someone who's more like passive or who might have other income streams and they pay less taxes because of it. And also they often give back a lot of the profits in the market because they tend to overtrade, they have more opportunities. It's very hard for a day trader who is really active and loves day trading to kind of step back and say, okay, I'm done for the day. I'll take a step back. I won't trade anymore. It's very hard for them to do it. They actually are often going back in the market for the afternoon, for the evening, and then they lose money they earn in the morning. It's very easy to say my target is going to be 1% per day. Try to do that every day. But in reality, it doesn't work the same. It works where you have many days where you overtrade and you go in a cycle where you lose more than you thought. And then some days where you make good profits in the morning, but you lose it the afternoon or the evening. And some days where you just kind of don't have any trades and you try to force things up to be able to find good setup in the market to reach your target for the day. So understand that yes, you can make more money day trading if you do it right. You can definitely achieve more returns in my opinion, because you have more trades, you have more opportunities in the market. But someone who is swing trading and doing it right, meaning you take a few trades, maybe a month, you increase the risk a little bit more, you scale into trades, you manage your trades a bit more loosely, that person can make more money on their account because they are more patient and they tend to let things play out more in their favor. And also they're pretty quick to get out when it's time to get out, but they also kind of scale into positions and build really big size in the market. Really the key thing here is don't get into day trading because you think you can make more money or the returns will be bigger. In fact, they'll probably be smaller in the beginning because you have more room for mistakes and room for overtrading and kind of bad mindset issues, and also paying a lot more in fees. So be careful about that for sure. If you want to see a proof that you can make pretty good money swing trading, check out the first link below. It's going to be my first week trading in Europe a few months back. Like I said, it's a bit dated, but it's really valuable because you can see actually the profit I made, the trades I took, and all that good stuff, and the process behind it too. So I'll leave it there, you can check it out. I'm by no means making millions from trading, but I think I have a pretty good income and pretty good results, and I'm happy with it so far. Always room to improve better, but that's where I'm at so far, so you can check it out. If you want to see more about how I trade my strategy, check out this video here. You think you'll like it. Let me know in the comment section below what you think about this video and what you think about the first week I had trading in Europe. And I'll catch you back here in the next video pretty soon. Ciao.